Hey, I'm Gene Goldman. Here's a look at the week ahead for the week of July 24th. We have a busy week. Three things happening. Number one, we have more corporate earnings. Number two, key economic data comes out, including the first look at second quarter GDP. Also, PCE, the Fed's preferred measure of inflation, comes out. And then we also get a reading on consumer spending. And the third, the most important, is the Fed meeting on Tuesday and Wednesday, where the Fed decides interest rate policy. So let's discuss this Fed meeting and cover my three expectations. The first expectation is that the Fed raises rates by 1/4%. No surprise, the market expects it. As you see here, there's a 99.8% chance that the Fed raises by 1/4%. Also, if you read the June meeting minutes, this is the last Fed meeting, the Fed said they would pause in June in exchange for a July rate hike. Also, economic data like the consumer price index is starting to slow down pretty remarkably. So this all suggests that this is likely the last rate hike this year. Also, most importantly, the markets expect this to be the last rate hike. As you see here, if the Fed raises this week by 1/4%, this puts the Fed funds rate at the market's implied year-end Fed funds rate. All this means is that the market expects one more rate hike this year by 1/4%, and by raising this week, this will match the market's expectation. My second expectation is that the Fed maintains a higher for longer bias. Services inflation is still pretty elevated, though it's coming down a bit, but that's primarily airline fares. But core inflation still remains very sticky. If you look at the Fed's dot plot, and this is at expectations of where the Fed sees inflation and economic growth, the Fed expects core PCE, again, the Fed's preferred measure of inflation, to still be at 3.9% at year end. Remember, the Fed targets 2%. This is almost double that number. The third expectation is that Jay Powell, the head of the Fed, in his press conference, won't say that this is the last hike. If he hints that this is the last hike, markets may optimistically lower rates, may lower borrowing costs, and this could reverse some of the tightening that the Fed has worked so hard to slow the economy, to slow down inflation. Also, more importantly, look for clarity from him, because he said in a speech in late June at the Banco de España conference, he said more restriction is coming. The possibility of moving at consecutive meetings is possible, but the data has weakened since then. We need some clarification from Jay Powell. Overall takeaway, busy week this week, earnings, economic data, and the Fed. All eyes will be primarily focused on the Fed. The inflation data says no more hikes, but the data can change pretty fast. For example, you look at here, housing, which has been struggling for such a long time, is returning with a vengeance. We have to watch this data carefully to understand where the Fed is going. Thank you for listening. For more information, please follow us on Twitter at Cetera IM, and see you next week. Thank you.